Price, that's the number one technical indicator.
You do best by investing for the longer term.
If you can't explain what the business is doing, then that is a huge red flag.
Some technological change is going to put you out of business.
It really is a genuinely extraordinary situation.
Welcome back. I'm Hayden Brain, and you're listening to Opto Sessions, where we interview the top traders and investors from around the world, uncovering their secrets to success. Brad Loncar is a biotechnology expert, a pioneer in biotech investment, and the index provider for two Nasdaq-listed biotech ETFs, Loncar's Cancer Immunotherapy ETF and the China BioPharma ETF. Brad is CEO of Loncar Investments and has a wealth of investment experience, having started out at Franklin Templeton as part of their management trading program. Brad's also spent time in the US political sphere, having been appointed senior advisor at the US Treasury Department in between an investment directorship in the Bush-Cheney administration and a short tenure as director of administration for John McCain. Brad currently shares his expertise on loncarblog.com, Nasdaq.com, and contributes opinion pieces to Endpoint News. We discuss the rampant innovation transforming a constantly evolving industry before examining Loncar's two unique ETFs. We finish the interview by looking ahead, where Brad highlights his favourite innovations at the cutting edge of biotechnology. Enjoy. Welcome to the podcast, Brad. It's great to have you on the show. How's your week been so far?
Thanks a lot for having me. With biotech, there's never a dull moment. Last week, we had a really monumental approval of a new Alzheimer's medicine in the United States. And we're still all trying to figure out what that means because there's some controversies behind it. And then this week, we've had some major vaccine readouts. And so that's one of the things that I like about biotech is it's very news-driven and catalyst-driven, and it can be quite exciting when there's important news happening. And over the last week, that's definitely been the case.
Yeah, absolutely. I can imagine it's been extremely busy over the past week, or even over the past few months, probably since the start of the year, no doubt. But I think we can get into that theme almost straight away. The pandemic has had an enormous financial impact on many sectors, and a lot of the time that's been negative. But biotech has at least seemingly weathered the storm. Between January 2020 and January of this year, the average share price for European and US biotechs, for example, increased at more than twice the rate of the S&P 500. So do you think we can expect this sort of trend to continue over the next 12 months? What do you think what's your outlook for the biotech sector over the next 12 months in general?
Yeah, well, I can't really predict future performance. No one has a crystal ball. But what I would say is you're absolutely right. The way I describe it is biotech went mainstream last year. And what I mean by that is, biotech has always been a niche in like the investing world and really overshadowed by the tech sector. I mean, the tech sector is just magnitudes larger. And one thing I have always been frustrated by as a biotech investor is that, with tech, you can see like a Tesla driving down the street, or you can use Zoom or, a new social media app. And so everyone understands it and feels like, they want to invest in it or something. So biotech's different because it's so technical. You don't normally see these advances. And it's really frustrating because there's so many game-changing things happening in medicine today. It's just so exciting. And one, I think, silver lining of the tragic year that we had last year is that, first of all, I think that the average person out there, for the first time, maybe ever for a lot of people, really understand how integral our sector is to the normal functioning of society. And I think another thing that's positive, from the sad event is, people saw like mRNA, for example. You heard these stories about how traditionally it takes 4 to 5 years to develop a vaccine. And look what companies like Moderna and BioNTech and Pfizer did and how quickly they were able to develop those mRNA vaccines. And what I tell people is there's like a dozen mRNAs out there. different things that are game changers in medicine that in many cases, like mRNA, might be platforms. And so I think it was a big deal for our sector that biotech, essentially, not from a stock market perspective, of course, but just from a pandemic perspective, was literally on the front page of every news site for an entire year, and still is. And so, you had a lot of money that flowed into our sector. People were, for better or worse, kind of throwing money at headlines. But I think people have really appreciated biotech's role in society, and also started to understand some of the amazing advances that are happening today. So I don't know what the performance is going to be. Nobody does. But what I would say is, I think that people have woken up to the fact that this is an industry of the future. And so I expect it to be less of a niche, the way that people perceive it. I expect it to be more of a mainstream sector. And I guess the last thing I'd say is, I meet people and I hear people talk in the news all the time who were like tech investors, or what we call generalists. In biotech, we have what we consider to be life sciences specialists, and then like everyone else who's kind of generalists who invest in everything. And one thing I've heard a lot is, over the last six to 8 months, is there's a lot of generalists out there who have said, I need to get caught up. I need to start understanding how to invest in biotech. And I think that's a good thing. I think science is a great thing to be investing in my opinion.
Yeah, no, I'd absolutely agree. Yeah, it's an interesting point about it sort of becoming mainstream as a result of this pandemic. I wonder if the growth within this sector already existed, but perhaps the pandemic has accelerated that trend. What's your take on that?
Well, I guess what I'm trying to say is the science, especially over the last 5 or 6 years, has been very special. Like there's special things brewing. We'll talk about technologies later, but there's using the immune system in cancer. There's something called gene therapy and gene editing. Like these are new ways of new types of therapies that have, I think, a lot of promise and potential, and some of which are already on the market today. So the science has really been accelerating, and hopefully it will continue. I mean, that's ultimately, at the end of the day, what if you're investing in biotech, you're investing in science. And so, if scientists and companies keep succeeding, then that's what's going to determine whether it's a lucrative sector to invest in. If the science kind of fails, then it's in big trouble. So I think our sector is maybe less cyclical than others, although we are affected by the ups and downs of the economy and interest rates and things like that. But I think at the end of the day, what the bedrock of all of this is science. And for last at least 5 to 10 years, I think something really special has been brewing, and hopefully that will continue. I can say, as somebody who follows the science very closely, there's a lot of really promising things that are in development right now. So it's a very exciting sector to be around.
Yeah, no, absolutely. It does seem to have reached an inflection point in terms of the innovation within the sector over the past sort of 5 years or so, as you say. And I think that's a fascinating start to the podcast. And there's some themes that we'll get into, as you alluded to earlier, later on. But let's return to sort of your background and what you do on a day-to-day basis, just to give the listeners a bit of context for the rest of the conversation. So in doing my research before the call, prior to Loncar, you worked for Franklin Templeton, an asset manager, and you worked for them as part of the management training program. This wasn't something that I was familiar with, so perhaps you can talk to us about what that role entailed.
Yeah, that was my first job out of college, and it was really the best first job out of college you could possibly have had if you were interested in finance. And what it was is it was a 2-year program, and there were a handful of us that were in this. I'm guessing maybe 7 or 8, if I can remember. And what you did was every quarter you worked in a different department of the company. And so you were exposed to all levels of essentially how a mutual fund company worked, which is what Franklin Templeton is. And so you would work like, for a quarter in fund accounting, and then in a quarter in risk management, and then a quarter in, portfolio management. And it was really a great way to be exposed to all of the different pieces that, go towards, making a mutual fund company run. And so it was really a special, first job type opportunity. I'm very grateful for it. I'll tell you a very quick anecdote. I hope I don't wander off, but just goes to show you how, surprising life can be, and how some of the most important lessons you learn in life are quite unexpected. So every quarter we kind of, we're told like which department we'd be working in next. And when I started, the very first assignment I received for the first quarter was actually human resources. And it's funny, like as a young person, you want to go straight to like portfolio management, and, you're like competing with the other people in this program to like look good and everything. And I remember being so dejected that my first quarter was going to be in human resources. And so when I started, like soon after I started, September 11th happened. And our company, Franklin Templeton, had actually just acquired a subsidiary that sadly was at the top of one of the Twin Towers. And ultimately, we sadly lost nearly 100 people. And one of my jobs in human resources was actually to reach out to the families and just kind of coordinate and communicate with them. And it really hit home to me, what's important in life. It was my first job experience, like straight out of college, was like, going to this human resources and having this like, huge sad event happening, and being really in the center of it, working with those families. And I travel to New York a lot and go to the financial district. And it's really amazing to this day, whenever I walk by the Twin Towers monument, I recognize a lot of those families that I spoke with back then. And it's an experience that I'll never forget, that, we're all working hard in finance. At the end of the day, we're all people, trying to do good things, who have families. And, it really, really shows what's important in life. And, over the last year, we've all gone through something like that as well with the pandemic. And so sometimes it's a reminder that there's more important things in life than the stock market and investing, for sure.
Yeah, no, absolutely. I think it was a fascinating anecdote. I'm glad you interrupted me to share it. I think that was a really interesting thing to share, and what a kind of start to your professional career. That's being thrown in the deep end and then some. So why don't we move on then to your next couple of roles? I've kind of stuck two together in reading your LinkedIn profile. It seemed that you had a sort of sojourn within the US political space, first as Director of Investments for the Bush-Cheney administration in 2004, I believe it was, and then later as Director of Administration for John McCain in 2008, I think. So how did you come to be involved in US politics in general? How did that come about?
Yeah, so towards the end of my 2-year management training program experience at Franklin Templeton, I got word that President Bush's reelection campaign needed somebody to invest their money. I knew his brother Jeb well. I'd worked with him in the past. And so because I was working at an investment company, my name came up. And essentially, the campaign was going to have about $100 million of cash. And back then, that was a lot of money. Today, those campaigns have like billions of dollars. But back then, that was like an unheard of amount of money. And they wanted to not just like put it in a bank account and not earn anything. Obviously, you can't be like super risky in trying to like do anything on top of it. But essentially, I was hired to manage that $100 million in a very short-term money market-like fashion in municipal bonds. So it was really an opportunity I couldn't pass up because, I was like young guy, like bottom of the food chain at Franklin Templeton, and here's an opportunity to manage $100 million for the president of the United States.
Wow.
It was really an unbelievable opportunity. So I went there and did that. And again, I don't want to blow it out of proportion because it was very short-term paper, super safe, municipal, bond type things. But it was still, a privilege and a huge responsibility. And so I went there and did that. And I also managed the budget for a bunch of the divisions. So just kind of like kept track of their spending and everything. And then, for McCain, like kind of did the same thing. In that case, they didn't want to do the investing like the Bush did, but they needed someone to manage the budget and also to help run the administration department. And those are very specialized roles. Like there's not like a pool of people who have experience doing those things. So since I did it on the previous one, like I was a natural person for them to call to do it again for McCain.
Yeah, absolutely. Yeah, what an interesting couple of roles. And I think in between those two positions, still within the political space, I suppose, you were appointed senior advisor to the Undersecretary for International Affairs at the US Department of the Treasury. So, I mean, for someone that isn't massively au fait with US politics, obviously being based in the UK, perhaps you can just sort of tell the listeners typically what sorts of things you'd be advising on a day-to-day basis.
Yeah, so for full disclosure, I was there for a very short period of time. I actually hated it.
Wow.
The background on that is, so like, when you work for a presidential campaign, if you win, of course, there's appointment opportunities throughout the government. All departments in the U.S. government have room for what's called political appointees. And so I was appointed to work in the Treasury Department. And my boss was a guy named Tim Adams, who was the Undersecretary for International Affairs, as you said. So he's the top person at the Treasury Department for international relations and like monitoring like international economies and things like that. And because of that, he was on the road pretty much the entire, his entire job. And so there were two senior advisors, myself and one other person. And the other person was kind of like a policy advisor. And my role was to keep the department running. So I was in charge of like, budget, personnel, all of the daily operations types things to keep the department running. And I was also in charge, the Treasury Department wanted to place Treasury officials in embassies around the world in important economies. Those are what we call attaches. And so I worked to open a lot of those attache offices.
Got it. Okay. Yeah, interesting. But you hated it. You weren't there for a long time.
Yeah.
Why didn't it work out? Why weren't you keen on that position?
Yeah. So to me, like I have a lot of respect for the government and people that work there. At that stage of my life, I was still like a young hard charger, and to me, that it felt very bureaucratic. That was the type of workplace where at like 5:01, like everyone was out the door essentially. And so, I just felt like, I don't know, I felt like I was just kind of spinning my gears doing like, I guess like a 9-to-5 that I wasn't happy with. And so I was only there for a short period of time.
Yeah, I know people that have worked within government and civil service here in the UK, and there's a similar sort of culture there in terms of very much 9-to-5, out the door at 5:01, as you say. So yeah, definitely empathise with you on that. So I think that's done a really good job of explaining your earlier career, but then obviously to bring us to present day, we need to discuss your CEO role at Loncar Investments and kind of what you're doing now on a day-to-day basis. How do you go from all of that, the earlier sort of asset management stuff at Franklin Templeton, the later political positions within certain administrations and for certain presidents, to then founding essentially your own investment firm? Like, was there a particular event or thing that happened to kind of make you take the leap, or how does that come about?
Yeah, that's a great question. Actually, I actually need to go back in time. So I've always been a bit of both a science nerd and a finance guy. So like at a very early age, I had like a custodial account, like, that my dad had to oversee. We were doing dividend reinvestment programs. And I think I was investing in stocks like before I was even in high school. So I always loved the stock market, but I also love science. I had a high school biology teacher. His name was Al Frisbee, who had a huge impact on my life. I absolutely loved biology. And when I started in college, I went to school in Florida at the University of Miami. I actually started out as a pre-med student. And at my college, pre-med was a weed out major. And I kind of got weeded out because I love biology, but I hated chemistry. And to this day, I still hate chemistry. So I ultimately changed. In college, I ultimately transferred from pre-med to finance, but I've always had this love of biology. And so like when I was working at Franklin Templeton, like I wasn't working in biotech specifically, I was doing that training program. And, even when I was doing those campaign and treasury work, I was always like, keeping up with, what was going on in science and biology. And like from a stock market perspective, I was interested in biotech companies and everything. And so, my last like official job in Washington was working for John McCain. And, sadly, we lost that election. And when you lose, unlike my Treasury Department experience, like there's no jobs, like, and also it's just like a very stressful experience. And I'd kind of had enough of that. So I was born and raised in the suburbs of Kansas City, and I wanted to move back home and focus on like get back to the investment world and also, keep track of science and everything. And so this was 2008, and it was literally the heart of the financial crisis. It's one of the reasons why, John McCain lost that election, is because the financial crisis was happening and the economy just literally went into a nosedive then. And so I like my original plan was to like look for a job, but this was the financial crisis and all companies were like laying people off. And so like, how I started doing this was out of necessity. Like there were no jobs out there. And so got home and like I literally, started investing for myself and for my immediate family. We essentially started like a family office. And, I started doing research and I started blogging and tweeting. And I started traveling to investment conferences and to medical meetings. Like one thing that's totally unique about biotech is a lot of the information you need to know to be a good biotech investor has nothing to do with the stock market. So for example, throughout the year, we have what are called medical meetings. So like in cancer, for example, the biggest cancer research conference of the year is called ASCO. It happens in Chicago in June every year. And it has nothing to do with the stock market, but it has everything to do with the stock market. Like all of these companies, present the results of their clinical trials and their latest research and everything. And where you hear all about that is at those conferences. And then, investment banks also hold, conferences where companies give updates and everything. And so, yeah, I was just kind of doing, I kind of like, started out hoping to, to get a job. And in the process, I started becoming like a full-time investor and creating essentially a company of my own. And with my experience at Franklin Templeton, I knew like the mutual fund industry very well. And one thing that I had seen when I started really focusing back on in investing again, is how ETFs were really taking over the world. Like mutual funds, frankly, have been kind of going away, and everyone's been focusing on ETFs. At least that's been my experience. And there's thousands of ETFs today that cover like all kinds of different things. But back then, there were only a handful of biotech ETFs. And one thing I noticed as a biotech investor myself is that they were very broad, in my opinion, and very hard for the common person to understand, and very, in my opinion, not focused on the right things. And, we talked at the very beginning of this program about how special some of the advances in science and in biotech are today. And so I had this entrepreneurial light bulb go off in my head that, I wanted to start creating products that help more people invest in the biotech sector and invest in science and invest in innovation. And so I started to research how ETFs work. And so slowly my focus transitioned from, investing my own money and that of my immediate family, and maybe actually doing a business that would help, more people as well.
Yeah, absolutely. And I mean, why don't we dig into kind of the investment philosophy behind some of those products that you went ahead and set up? I was reading your website, and particularly the about section on the site, because I wanted to try and understand kind of what sets you apart from peers and what Loncar Investment is really about, I suppose. And there was a tagline on there that read, "Precision medicine meets precision investing." So how do you integrate this precision within your investment approach, do you think?
Yeah, so the idea there is, I'm a big believer that the way that people think about biotech investing is changing or should change. And what I mean by that is, when I started out, now over 20 years ago at Franklin Templeton, I thought of the tech sector as one thing. There's a massive ETF, the triple Qs. And, especially back then, I think most people thought of tech as one thing. And what happened over time is, I don't think most people think of tech as one thing anymore. I think they view it as individual sectors within tech. So there's, semiconductors and software and social media and, all of these different things. Some of them are high innovation in, higher growth industries, and some are low innovation in low growth industries. And I think they appeal, to different groups of investors, but I think that investors in the tech sector view them differently. Well, I think that when I had the idea for this business, and it's even true today, although the transition is definitely starting for sure, I think that people think and thought of biotech as the same way we used to think of tech. They think of it as one monolithic thing. And what I know as a biotech investor is it's not. It's exactly the same thing as tech. There's, in my opinion, areas of biotech that are high innovation and higher growth potential. And there's areas that, payers are really pushing back on. And there's areas that, are really ones that, you may want to avoid. And so what I wanted to do was to help make products that segment it in that way, because I think that's the future of how people will think of biotech. And at the end of the day, the foundation behind all of this is science. And so what I hope to do is, to create things that help investors, think about investing in the best science within our industry.
Yeah, I mean, that's really interesting. So have you, I don't know whether this is down on paper or anywhere on your website or simply perhaps just in your head, have you defined, I suppose, the biotech universe? Are you fairly definite and concrete on the certain sectors within biotech? I just wondered whether you had that kind of mapped out.
No, I mean, it changes over time. So for example, messenger RNA, we weren't talking about that 5 years ago because it wasn't a platform. And so gene therapy, over a decade ago, you wouldn't have been really talking about gene therapy. So I think it's dynamic, and it really changes over time. I don't think there's a set number of pieces that make up the biotech puzzle. I think it's a thing that's all, dynamically changing over time.
Yeah, no, absolutely. And arguably you could say that about the kind of sector universe that's laid out by MSCI. I mean, to define a whole investable universe within a definite number of sectors perhaps isn't something that's really fit for purpose in 2021. It's something that we've spoken to previous podcast guests about. That's why I asked the question whether you felt like there was a set universe within biotech, or as you've, I think, rightly suggested, it's more of a evolving kind of living organism, I suppose, in the sense that innovation over time will add to it, and it will continue to grow over the next 10 years, 20 years, 30 years, and so on. So I think that's a really interesting insight. And just to finish on your investment philosophy, I suppose, and the way Loncar think about their investments, again, on that section of your website, you point out, I think rightly, that biotechnology innovation matters. It's an important thing, regardless of whether you can make money out of it, I suppose. So is the focus for you in this area of the market about more than investment returns? To what extent is this a vocation for you?
Well, for sure. Look, I'm an investor. The investment return is always paramount. I think if you're designing like a financial product, that always comes first and foremost. There's some people, I think, that wrongfully argue that with something like, there's people, I've always heard people quote statistics that I think are bogus statistics, where they'll say something like, young people today, like it matters more to them to invest in a good thing than it does the return of the investment. I highly doubt like the scientific rigor behind those types of statements. I think anything that's related to investing, people are looking first and foremost about whether it's, a good investment. And so I think that those things you do matter a lot. And I do think that biotech investing matters a lot. One thing that frustrates me often is, ESG, for example, is a massive thing today and continues to grow. And biotech's never really like included in the conversation. I think because pharmaceutical companies have such poor reputations and are hated so much. So biotech, I don't think is like really traditionally seen as like an ESG investment. But like, what more important thing can you invest in than, in your own small way, helping to a company develop a medicine that ultimately helps somebody one day? I think that's, in life, like I think we're all programmed to try to do the right thing. And so if I can invest and earn, hopefully a good return, while also doing a good thing for patients, at the end of the day, like we always serve patients. I always think of that as an investor, doing something that at the end of the day is going to help patients, because like the CEO of Merck, from like 50 years ago, George Merck, had a really great quote. He said, do what's right for the patient and the money will follow. And sometimes as an investor, I feel the same way. So to be able to that the reason I like biotech so much is, to be able to invest in something is important as medicine and, these new technologies that are helping people. I mean, the vaccine companies literally saved the world this last year. I mean, that's no exaggeration. So I think the investment aspect, always comes first, but I do think that those other things are really important. And I think that biotech really doesn't get I don't know what the right word is, the credit it deserves when it comes to like, doing a good thing for society. I mean, already, the pharmaceutical companies like are like, Pfizer kind of saved our country, and already you're starting to hear politicians start to beat up on them again. So it's kind of frustrating, but this sector does so much good for the world, and I'm proud to be a part of it in my small way.
We hope you're enjoying the episode. For interviews like this every Thursday, subscribe wherever you get your podcasts. And while you're there, make sure you give us a star rating and leave guest suggestions along with any other feedback in the review section. Now, back to the show.
Yeah, absolutely. I think that's a really interesting insight actually about ESG classification as well, and biotech not necessarily being involved in that conversation. That's not one that I'd considered before. So that was really fascinating. And I think actually that's the perfect juncture to move on to the ETFs themselves and to discuss them in greater detail. So if we start first with the cancer, ticker CNCR Immunotherapy ETF. This was Loncar's first fund, of which I should add that you're the index provider for. Firstly, why did you decide to base the inaugural fund on this particular or specific area of the industry?
Yeah, so I've always been interested in this field of immunotherapy. So if anyone out there hasn't heard of it before, it basically is what it sounds like. It's harnessing the patient's own immune system to treat the cancer, rather than using like a chemotherapy or something. So like my grandfather passed away from prostate cancer, and one of the first immunotherapies was for prostate cancer, and I became interested in it at a very early moment. So immunotherapy, people have actually been working on it for over 100 years. And until about a decade ago, it was one of these fields where if you believed in it, people thought you were totally nuts. But I was one of the early believers. And, around the time that I had this idea, for this, precision way of thinking about biotech, immunotherapy was really turning the corner. And you started to see real success in clinical trials, and you were starting to see, more drugs, immunotherapy drugs, start to make it to the market. And so it really fits perfectly the definition of what I am trying to accomplish in segmenting biotech. To me, it's the most important science that's happening in our industry at that moment and even today. And again, I'm a big believer that the success factor of being a biotech investor is investing in the best science. And I really believe this was the best science, and I do today. So at that time, I created an index to start tracking the companies. And I went to a company called Exchange Traded Concepts, which is what we call a white label ETF issuer. They can basically, if you're somebody like me who has an idea for an index, they can make it a reality and turn it into a fund. And it's really amazing how coincidental life is. So one of the founders of Exchange Traded Concepts, Jay Baker, he was the first person that I contacted. He's a cancer survivor. So I should say before this, back then when I created this, it was like immunotherapy was turning the corner, and like everyone in biotech knew about it, but like nobody outside of biotech like had really heard of this yet. So in talking to like financial companies, like I went to different ETF firms to see if they'd be willing to license my index and turn it into a fund. And like nobody knew like what the heck I was talking about. And when I got to this Exchange Traded Concepts company, the first person I talked to, Jay Baker, was a cancer survivor. He got it immediately. And one of the other co-founders and one of the directors of the company, Rich Hogan, amazingly was in the trial. And both of these gentlemen have said that it's okay for me to share this. Rich Hogan was in one of the original like landmark immunotherapy trials. It was a combination of two drugs called nivolumab and ipi, what are now Opdivo and Yervoy. And so this guy was in this study, and he credits it as saving his life. And so like when I went to them and I said, I've created this immunotherapy index, what do you think? Like every other person I had talked to up to that point was like, what are you talking about? Go away. And these two cancer survivors knew exactly what it was and why it was important. And so ultimately, they licensed the index and created the fund, and the rest is history.
Yeah, well, that's amazing. I mean, the serendipity in life sometimes really is astounding, and what sort of perfect people to be receiving that pitch, I suppose. And I mean, the fund's gone on to do extremely well. We'll cover sort of historical performance in a second, but I just wondered whether, I guess, again, as more of a secondary or bonus motivation for the founding of the fund, you will have driven awareness in this space in what, as you've already pointed out, was a fairly sort of niche area of the industry. Is that one of many motivations to found this fund, or did that not really enter thinking?
Without a doubt, as I described, I've been an early and fervent believer in immunotherapy. I believe it's just a better way to treat cancer. And yes, most people hadn't heard of it back then. And even to this day, I think a lot of people have, because number one, it's so prevalent today. And number two, in the United States, they even have commercials for these drugs. And so you hear that word immunotherapy, but to be able to raise awareness for something that, to me is so important. And, with my colleagues, literally, one credits it with saving their life. That's something that's very, rewarding to me, for sure.
Yeah, no, it sounds extremely rewarding. And I said we discussed the historical performance of the fund. We don't have to go into too much detail on this, but I think it'd be interesting for our listeners to note that the fund, when I checked yesterday, is up 17% over the past 12 months. So very, very solid and commendable performance over the past year. Within that period, then, we won't look ahead, but within that period, what do you think the key tailwinds were supporting that performance, even if there has been a slower start to 2021?
Yeah. So first of all, I don't want to come across as I am the index provider, and I can really describe the theme and what's going on and how I've compiled the index. So I don't want to comment too deeply on performance, but what I can say, what's been going on in the field over the last year, and I think this has been reflected, in the way my index tracks it, and the science keeps marching on. So, for example, one thing we haven't really talked about yet that's a really important component of this is immunotherapy itself is not one thing. There's dozens of approaches to immunotherapy. For example, there's one that's called cell therapy. Your listeners might be familiar with a term called CAR-T. And essentially what that is what companies can do today, and this is working well today in certain types of blood cancers, is they can draw the patient's blood and re-engineer the cells outside of the body so that they're better able to find markers on cancer cells. And then after they've done that re-engineering, to infuse them back in the patient and, let them find the cancer and go to work. So that's called cell therapy. There's other types of immunotherapies. There's a big class that are called checkpoint inhibitors that cancer kind of naturally puts up a stop sign in front of immune cells. That's what we call a checkpoint. So there's something called checkpoint inhibitors. And so the immunotherapy itself is not one thing. It's actually one of the reasons I created this, is because it's really hard even for experts to invest in this type of sector, because in biotech, it's extremely hard to pick individual winners. And in this case, there's an additional layer of difficulty because it's hard to even pick the right, modalities. And so I think an index approach that's well diversified and bets on many of these things at the same time, in my opinion, is a good way to think about it. And so what's been happening over the last year, for example, is these drugs have been succeeding. So for example, that cell therapy approach that I talked about had a landmark approval in March. It was that CAR-T approach was approved for a type of blood cancer called multiple myeloma, which was a really important thing. But because before this approval, that cell therapy approach was only working in certain types of lymphomas and leukemias. And so you're starting to see, just over time, not everything has worked. There's been a lot of failures, which is the way science is, but you're starting to see more drugs like the multiple myeloma approval make it across the finish line. And so I think that has been a big factor. And another thing that I've been very proud of that's been unexpected is, the pharmaceutical industry and the biotech industry, I think, deserves a lot of credit, because when COVID hit, it was kind of an all hands on deck mentality of how can we help out? How can we put our scientists, stop what they're doing and maybe focus on COVID? Or how can we, take drugs that we're working on and maybe repurpose them for COVID? And another amazing thing, this was, you used the right word, serendipity earlier, is, think about COVID and vaccine development and all of that. Well, all of that is based on immunology. And these cancer immunotherapy companies, at the end of the day, are immunology companies. And many of them, even though they were focused, on cancer, were able to use their immunology know-how and kind of pitch into the cause. And so, for example, the mRNA companies were components of our index, and because at an early time they were focused on cancer, and today, they're really infectious disease companies. The world, including us, didn't see COVID coming, and they were components in our index. And ultimately, were able to use their immunology knowledge to help tackle COVID. And a lot of other companies in our index, to a lesser degree, were able to kind of, benefit from the momentum of that. And so there's been just a handful of things like that. But the biggest thing that's really been moving stocks and therefore the index is just success in clinical trials and success in getting new drugs approved, like that multiple myeloma CAR T.
Yeah, okay, great. Well, let's dig into the index then. The underlying index of which you're the provider, I believe, is made up of 30 constituents. So I read that the fund is made up of 30 constituents, and the fund mirrors the index. So I'm hoping that's correct, but you can tell me if I'm wrong. But either way, what sort of diversification are you looking at or looking to achieve within the index? Are you looking for quite a broad diversification within this quite niche sector? But I suppose, it could be broad, but that's relative, given that, as I say, it is quite a niche area or corner of the market. But yeah, what sort of diversification are you looking for?
Yeah, exactly right. We're just looking to create a diversified basket of the leaders of this, of this industry. And what we hope it will capture at the end of the day is the wide variety of work that's happening in this field. I view it as a cancer research basket, and you're going to have companies that have successes in clinical trials. And the way we've designed it is it's 30 companies. And one thing that has been challenging when we were thinking about designing this at the very beginning is that, a lot of the early leaders and even the leaders today of this industry are large pharmaceutical companies. So, for example, the biggest immunotherapy drug on the planet is a drug called Keytruda from Merck. And Bristol Myers Squibb has a huge one also called Opdivo. And so for our index to be a true immunotherapy index, those types of companies have to be in there. But at the same time, we also want to invest, or we also want to focus on middle and smaller cap companies that are, developing the next generation of immunotherapy drugs. And so the way the index is designed is it's 30 companies, and we start out by choosing the 5 large large cap pharmaceutical leaders in this space. So like the Mercks and Bristols of the world. And then after we've chosen those 5, like immunotherapy today has actually become a big thing that if we didn't do that, like literally almost every pharmaceutical company is like, in some way involved in immunotherapy today. So we chose 5 like representative leaders. And then behind those, we have the 25 largest by market cap biotech companies that are working on immunotherapy. And we chose to design the rules to choose the companies by market cap because we think, first of all, we're not active stock pickers, so it's not our job to like pick and choose favorites. We're designing an index. And number 2, we view, the way that, the market is valuing these companies and their market caps as, a recognition of the quality of the science that those companies are working on. Because, your average like middle and smaller cap biotech company, they don't have revenue, like, they don't have products necessarily. Most of them are what we call discovery stage companies. And how they're mostly being valued is by their science. And so we view by choosing the 25 largest by market cap, companies that are focused on this, we view that as like a good way of pulling together, the field in a diversified basket like that. And what ultimately happens when you do that is, you have then exposure to all of these different types of immunotherapies. We've got a lot of CAR T, cell therapy companies in there. We have companies working on what we call cancer vaccines. We've got companies working on what are called bispecific antibodies. So we've got exposure to all of these different immunotherapy approaches. And one thing that's really cool as it evolves over time is, some of those things are going to succeed and some of them, are not going to succeed. And over time, like as cell therapy succeeds, you'll see more companies working on it and you'll see the market valuing those companies higher. And so therefore it will become naturally, a larger component of the index. And as other immunotherapy technologies don't succeed, the companies working on those will kind of fall off. And so I created this, 2015, a long time ago, over 6 years now. And it's kind of been cool, I think, to see it kind of the way we design this to naturally evolve with the field. I think it's kind of a cool aspect of how indexes and I guess passive management work.
Yeah, definitely. It's a really valuable sort of snapshot of this area of the market that I guess most people, and certainly myself, wouldn't necessarily be familiar with. So it certainly alerted me to a few interesting companies that I might otherwise have been unaware of, or certainly some of the bigger companies actually having involvement in a space that I wasn't aware of. So that was really interesting. I just wondered, within the current makeup of the index right now, is there a particular bias towards a region or a geography? Like, is there a lot of US companies in there, for example?
Yeah, well, so for this one, you have to be listed on a US exchange. If you're an ADR, so if you're, UK or European or Asian company, if you're listed on the Nasdaq, for example, you would qualify. So because of that, the capital of biotech today is the United States. And so the majority of the companies for sure are US companies, but it does give you exposure. The index gives exposure to those, those ADR, those foreign biotech companies from outside the United States that are ADRs.
Yeah, okay, absolutely. Yeah, that makes a lot of sense. Well, okay, so if the US is the capital of biotech, perhaps the new capital or the coming capital could be China. I think that makes a kind of nice segue, hopefully, into your second, or Loncar's second ETF, again, that you're the index provider for. This is the China BioPharma ETF, ticker CHNA. So I've done a bit of research into this space, and it's fascinating kind of how much China are really trying to take charge of this particular area. And according to a UNESCO report, China were responsible for 44% of global growth in research expenditure in the 4 years to 2018. So that was the latest comprehensive data that they had available. But that expenditure grew from another report by 10.3% in 2020. So that momentum has continued to grow after that 2018 period that I just referenced there. So in your opinion, we've kind of perhaps given the status of the capital of biotech to the US, but if there was a challenger to that and one that seems to be growing momentum quite quickly, it might be China. What's your take on that? Are they at the vanguard of innovation in this space, in your opinion?
Yeah, I believe so. Like, to me, this is such a fascinating story. So you're going to have to be careful. I don't know how much time we have, but I can talk about this for hours. So yeah, as a biotech investor myself, a handful of years ago, I started to notice. So the bottom line on like China biotech is essentially before today, China did not have a biotech sector. So China's pharmaceutical industry was almost 100% generics based. And there was very little R&D and innovation, and like Chinese companies were not inventing new drugs and not trying to. Like the whole market, there was no market for it. And that started to change rapidly, especially over the last 4 to 5 years. And there's kind of a perfect storm of things that have catalyzed that change and really sparked the creation of a biotech sector in China. So one of them, for example, is the government. So the government there everyone knows China is like a manufacturing-based economy. So the government had this program called Made in China 2025. And the idea behind this program is like they're essentially said to themselves, like, we need to take our economy, to a new level and start focusing on those industries that are like the new economy, the higher value sectors of the future. And so this Made in China 2025 program is they highlighted a handful of industries, about a dozen, that they wanted to be not just self-sufficient in, but globally competitive in over that time period. And pharmaceuticals was one of those things. And so essentially the government said, we understand that pharmaceuticals and biotech is an industry of the future. Like, we want to be leaders in it. So that's one change. Second thing is their version of the FDA, which is now called the National Medical Products Administration, over the last handful of years has totally been revamped. So there's an international organization that was created by our FDA, the European EMA, and the Japanese regulator called ICH. And that's meant to harmonize regulatory standards for drug development and approval across the globe. And China joined that in 2017. And that's a really technical thing, but it's really important because it means to develop a drug in China today is essentially the same steps and therefore hopefully the same quality checks as it would be to develop a drug in like Europe and the United States. And so that not only modernized their FDA, but it started to have companies start to develop drugs like on the same playbook as like global companies. So having like, a strong regulator that's up to global standards was really important. You had entrepreneurs returning home, starting new, biotech companies that, work in the West in this industry. And from a stock market perspective, this was really the most important thing that catalyzed my interest in creating an index for this. The stock exchanges there, until a few years ago, basically wouldn't let biotech companies list on the stock exchanges. And so like the Hong Kong Stock Exchange, for example, had a rule that you need to have a certain amount of revenue and profit to list there. And just like the government recognized that, pharmaceuticals and biotech as an industry of the future. The Hong Kong Stock Exchange, came to the same realization and said, if we're going to be a leading global exchange, we need to compete in this category. And so in April of 2018, they created a new rule just for biotech companies. We call it the Hong Kong Biotech chapter, where they said, we're going to scrap that revenue and profit thing for biotech companies because we understand that's not how our industry works. And true development stage biotech companies will be able to list here in Hong Kong for the very first time. So that was monumental. I always tell people, the importance of that goes way beyond the stock market. If you don't have a stock market for a biotech sector, you can't have a biotech sector, because our industry is very capital intensive and biotech companies are constantly needing to raise money, and a stock market really facilitates that. So for example, if you're a venture capital firm, if you're able to list companies on the stock market, now you have potentially an earlier exit from your investment. And so that change was so monumental because it was really a really key ingredient to the whole ecosystem. So anyway, the Hong Kong Stock Exchange changed this rule, and ever since then, there's been a biotech boom or an IPO boom of biotech companies on the Hong Kong Stock Exchange. So since that rule changed, the first IPO was in August of 2018. There's been at least 30 companies that have used that new biotech exception to list there. So it's caused a huge IPO boom. And so this is kind of day one of biotech, at least this, on the Hong Kong exchange and essentially in China. And so I just kind of noticed all of that and started getting interested in it very early. I think I recognize the importance of that. And so I'm the type of person, so I just started to see these news events, talk of that exchange change happening. And, I started to see companies, that were founded by really smart people, conducting good science, start to be formed and developing drugs and everything. And I'm the type of person where I'll get I just said to myself one day, I'm literally going to get on an airplane and figure out what's going on over there. And I did, and I was really blown away. And so I wanted to create an index to really highlight what was going on there. And at the time, I'm not aware of any other thing like that. I think I was so early at the time, I'm not aware of anything that existed like that. And so to me, it was really an educational thing because it helped people really, especially in the, outside of China, learn, who the companies were and everything. And ultimately, I took the same exact thing with my cancer index. I took it to my, friends at Exchange Traded Concepts, and, I said, this should be a fund, I think. And they agreed and licensed it, and now it's a fund.
Yeah, absolutely. I think it's fascinating how those sort of several factors converged. I mean, you've got the governmental participation and regulation. You've got the Hong Kong exchange admission as well. That stuff converges to really, I guess, equal and generate a pretty sort of interesting, I think, and compelling opportunity for stock market investors. I mean, if I relate it back to that, a lot of our listeners will be thinking about it in those terms. So I think it's an important point to make. And actually, I've got a couple of stats here that are pretty mind-blowing. I think publicly listed Chinese biotech firms perform more than 6 times better, and this is just an average, against the S&P between January 2020 and January 2021, with their average share price performance more than doubling in just that 1 year. Now, this is translated into a significant performance for the Loncar fund. I don't think we even need to go into it, but I'll just call out the stat. The fund is up over 52% over the past 12 months, with similar performance year to date. So that performance is actually gaining in momentum in more recent times as well. So, I mean, really compelling historical performance that I think our listeners can do their own analysis on, but really interesting. And I think it was key to at least call that out. But let's just dig into a couple of areas of the index and its makeup, and then we'll finish on a couple of your kind of opportunities and what you see ahead for the biotech sector as a whole, because I'm definitely not as busy as you, and we're already 10 minutes over time. So let's try and get through this stuff.
Sorry about that.
So
I tend to talk a lot. It's my fault.
No worries at all. So the fund or the index, the underlying index as well, is made up of 56 constituents I counted. So again here, what sort of diversification are you looking for within the Chinese biopharma space?
Yeah, so this one's different than the cancer index. The cancer index is set at 30 companies. This one, there's no set number of companies. It's just meant to capture all biotech and pharmaceutical companies, and that includes like diagnostics companies and like any company that's truly in like the pharmaceutical ecosystem. It's meant to capture essentially all of them, and especially as this Hong Kong IPO boom is happening, we want to keep adding those companies over time as they IPO. So like we understand that we started this on like day one of something that's going to grow, we think in terms of the number of companies that are participating in it, continuously over time. And so it's pretty simple. If you're a biotech or pharmaceutical company or diagnostics company or, in life sciences in that way, and if you're focused on China, so if like, you're headquartered there, or if, 51% of your business is there at least, and if you're listed on the Hong Kong Stock Exchange or the Nasdaq, there's been a handful of these companies that have chosen to list on Nasdaq, but they're China companies that are focused on China. So if you fit those, and if you fit minimum market cap and liquidity and everything, you're included. And so one thing that's I think really cool about it is just to show, I think, how early we were to this trend. When we launched this in March of 2018, this had 30 companies in it. And today, as you mentioned, it has 56. And that's reflective of this IPO boom that's been happening and just this biotech boom in general that's been happening there. And so as all of those new biotech companies have IPO'd, the ones that have qualified, we rebalance and reconstitute this every 6 months. They've been swept into the index. And so it's grown from 30 to 56 over time. And, if the IPO market stays strong there, it will keep growing. I mean, the largest, the Nasdaq Biotech Index that tracks, Nasdaq-listed biotech companies has over 200 companies one day. And if China, does become, a true global leader in biotech one day, I don't see why this, won't keep growing and perhaps could even get over 100 or maybe even more companies one day. But today it's 56.
Yeah, great. And just to dig in quickly to the fundamentals, I suppose you're screening for to select the constituents within the index. So they're particular sort of business performance fundamentals in terms of, I don't know, PE ratios, or even do they have to meet certain revenue or sales metrics, for example, to be allowed into the index? Or is it more basic than that in terms of they have to have a certain market cap, for example?
Yeah, it's that basic. Again, most biotech companies actually don't even have revenue.
Yeah.
So it makes it as like an index creator. That's one thing about our industry that makes it challenging to design things. And for this particular one, we're really not trying to get. We don't want to get that cute, essentially, to use an American term.
Yeah.
We just want this to reflect the entire China innovative, biotech industry of China. And therefore, we feel like the companies that are choosing Hong Kong and NASDAQ are, the higher quality ones that, really want to be global leaders. And therefore, if you're in this industry and if you meet a certain minimum market cap and trading liquidity, then you're automatically included.
Yeah, great. Okay, well, to finish on this ETF then, is there one constituent within the index at the moment that sort of particularly piques your interest and that you're particularly sort of bullish on or excited about? Not necessarily because you think the equity is going to do X, Y, or Z over the next 12 months, but perhaps because they're particularly innovative, or they've come up with a solution that perhaps is unrivaled amongst peers within the certain space that it operates in.
Yeah, definitely. Yeah, so as you said, it's not like a stock pick, because I really, for most people out there, picking individual biotech stocks is way too risky. Like, even good companies have setbacks, but is like a company that's reflective of what I think is like, special with this theme. I would call out one called IMAB, which is actually listed on the Nasdaq. The symbol is IMAB. And number one, they have a great pipeline of many drugs, so they're not focused on any one thing. But a really important thing happened to them last year. So they're developing actually cancer immunotherapy drug. This company is actually also in my cancer index. So they're developing, there's a target in cancer immunotherapy called CD47. There's a term we use, they call that cancer's don't eat me signal. And companies are trying to design drugs to basically kill that signal. And it's the type of drug, it hasn't made it to the market yet. It's promising, but it hasn't been totally proven yet. And IMAB is one of the leaders in this. So they're not, years behind, like they're at the forefront of this. And they struck a huge deal with AbbVie, the mega biotech company here in the United States. AbbVie licensed their CD47 inhibitor. And that's the type of headline, like people I think kind of don't notice, but that's a revolutionary headline for a Western company as sophisticated as AbbVie to be licensing Chinese science for a drug that could potentially be first in class or best in class. And so I'd highlight IMAB because they're an example, like I always tell people, like with this theme, like you can't create a biotech sector overnight, like because science doesn't work that way. So many of the drugs that Chinese companies have today are not new inventions. They're what we call fast followers. So, maybe if a drug was invented in the United States a few years ago, maybe there's a Chinese company like, having their invention of it, their version of it approved today. But this is an example of where I think the industry is heading, which is that these companies are, really at the forefront and have a chance to, like, quote unquote, win the race for certain drugs. And so IMAB's a great example of that through that CD47 inhibitor and others that they're working on in their pipeline. So it's a great company doing great science.
Yeah, absolutely. And one that I think a lot of our listeners will be looking into after this interview. So let's finish on a final question then. To look ahead, I guess, for the biotech sector, the space as a whole, it seems to me anyway, is perhaps less dependent on economic or market cycles than, or at least when you compare it to some other sectors and industries. Firstly, would that be fair? And secondly, then, does that mean we're talking about biotech as a secular growth theme almost?
Well, not to cop out, but it's kind of a yes and no. The answer to that is kind of a middle ground, because it's not totally immune to cyclical things. So, for example, interest rates were a big thing in the news earlier this year. Everyone's worried about inflation, and interest rates affect all growth stocks. And so they're going to affect the multiples. If interest rates and inflation starts to go rampant, then that's going to affect all growth stocks, biotech included, because they're very volatile and growth oriented. But you shouldn't feel as if it's like totally immune to those types of macro factors, because it's not. But over the long term, at the end of the day, the thing that really determines biotech's fate is the quality of science. That is what you're investing in. If you're investing in the biotech sector, you're investing in science. And as somebody who's followed this for a very long time, I can say that, I really believe that we're at a special moment in science, and it's already become real. There's already gene therapies on the market, immunotherapies, and these other, mRNA vaccines, these amazing new technologies. And based on what I've seen that's in development for the future, I think that we're just in the very beginning of biology's moment. And so, I think at the end of the day, if the science comes through like we hope it will come through, it has the potential to be a very special, decade for the sector. But at the end of the day, that's what's going to determine success or failure, is the success or failure of, science in general. And so, that's what you're investing in, and we hope it will play out.
Yeah, absolutely. I think that's the perfect point to end the interview on. I mean, it's been incredibly fascinating with me, and I think actually, if you allow us, we'll have to have you back on to tackle a couple of the ETF points in more detail, and then we can speak about perhaps the biotech sector and the future for the space in more detail as well. But for today, I think that's it. So thank you very much for joining us on the podcast, Brad. It's been a real pleasure.
Likewise, thank you for having me.
Thanks for listening, everyone. Just a quick note before we sign off. If you're looking for an easily digestible daily update on the markets, this might be of interest. Opto Updates is our short newsletter sent every day during the trading week, giving you a bulleted list of the top 7 stories from the global stock markets. We've done the hard work for you, highlighting relevant opportunities and trends. And in addition, we'll also keep you notified of any new products, stock reports, or webinars from the Opto world. If you're interested, sign up using the link in the show notes. And thanks also to Co-Fruition for consulting on and producing the show. Until next time.